Matters. Hey everybody, welcome to this episode of Measure What Matters, hosted by the Idea Collective Small Business Incubator. Thank you, Bank59 and Quick Trip, for your support of the Idea Collective and everything you've done to sponsor them and keep them going to be the amazing opportunity that it is for all entrepreneurs around the world. If you haven't checked out the Idea Collective, you need to. I've got a link at the end of the presentation. You can definitely check that out. Today, we're going to be covering measuring what matters, the best revenue for your business. I know everyone's always excited about revenue. That's the thing that we feel like drives our business. If we don't get revenue, we're not in business. That's the biggest way we separate people. You're either pre-revenue or you're post-revenue. You either figured out how to get a customer to pay you some money or you don't have any customers yet. That is the big distinction. However, I'm going to tell you, not all revenue is good revenue. And I know some of us have had the privilege of being able to fire clients. I'm going to say that again. If you've had the privilege to fire clients, you need to celebrate yourself, because there's sometimes some revenue is no good. You've decided to allow areas of your business to shrivel up. And we're going to go into a little bit detail about how to actually calculate those and see which ones they are. So before we dive into that, a little bit about me. I'm Brent Halfwassen. I'm Milwaukee's small business coach. We focus on helping small business owners and entrepreneurs transform their hard work into hard cash so you can stop spinning your wheels and start building the success you started your business to do. If I can help you out in any way, do please feel free to reach out to me. If there's something that stands out in the presentation we have here, let's dive in and talk about that too. A little bit about what we love to do. We love working with owners, entrepreneurs, founders, and decision makers who are working hard, but you don't have much money to show for it. That's a real common place to be, particularly when we start out, particularly when we hit one of those plateaus, particularly, honestly, when we're not watching what's going on in our businesses closely. We get stuck doing. We want to do all the time, and we don't really figure out how to work smarter and not harder. We want to work with folks who want to match the link between what you do and the results you want to achieve. That's why I'm doing this Measure What Matters show today. It matters how we figure out where our revenue is coming from, what's good, what's not good. If you've launched and found reality doesn't match your plan, I'll absolutely want to talk to you. And if you have difficulty telling your story with impact, impact is the part that matters. Our stories are what sells. If you take nothing else away, remember, it's your story that sells. And we're going to talk about that a little bit more. While we're waiting for a handful of people to jump on, and there are more people jumping on the call as we go, I want you to go and figure out your revenue profile. So take 2 minutes to complete this. No, it's not a mindset survey. Good, we got to update that. Take 2 minutes to complete this survey. Before we begin, what we're taking a look at is what type of business you're in, whether you're service or product or both. And also how often you take a look, if you have your revenue separated by product line or service line. So do click that link and dive in there. You can either do the link, which is bit.ly, bit.ly/Brent PVM, that's price volume mix. Those are all lowercase, or you can do the QR code if you want to do that as well. When you get done with that survey, I want you to go in, find it somewhere. It's hidden on your computer. Your bookkeeper probably sent it to you and you haven't looked at it yet this year. Pull out a profit and loss statement. I just want you to pull it out for yourself. We're going to refer to it a little bit. I'm not going to look at yours in particular, I promise. But I want you to be conversant with it because there's a couple of pieces that we absolutely have to know if we're going to be successful when we look at revenue, because not all revenue is the same. And that's because we don't make the same amount of money each time we're on the revenue. So do fill that out. For those who are just joining, again, please take a minute or two. It's just a couple of questions to fill out your revenue profile. We need to understand what type of business you are. And when you look at your results, I know everyone looks at their profit and loss statements when they get them from the bookkeeper. Yeah, I see everyone nodding. Not everyone's a liar. Okay, I know everyone's not actually doing that all the time. Make sure to let me know, do you have your revenue divided up by product line or service line? Because that is super essential to what we're doing today. And if you don't, that's totally fine. We just want to get a sense of where people are. Awesome. Mitch, I see you showing up as Pat Miller. I know you guys are both good looking, but I'm going to update your deal here. Everyone, Mitch is in the house, so we all got to say hi to Mitch once we know who he is. There we go. We've got him renamed. Lisa, welcome. Patrick, welcome. Jonathan, appreciate you being on the call. And there's some more folks coming on. So I want to stop the share for a second. I want to go ahead and we're going to take a look at exactly what the results look like here. Let's see where the results are at for this particular question and see what people are saying. We got some responses trickled in. We're not going to look at it. Oh, we are looking at who's responding. We're not looking at who's responding. Here we go. Hey, we got mostly services and a blend of both. I am not surprised. And then also we're about 50-50. If people are regularly looking at what's going on or not, that is absolutely fine. It's just good to know where we're at. So we're dealing with mostly service businesses, and that is going to be absolutely just fine. So let's dig in. Again, light up the chat if you've got some questions, and we're going to see what's happening. Again, the assignment, please do go out, pull up your profit and loss statement just for yourself. Keep it to the side. Don't drop it in the chat, please. We want to keep your confidentiality. Someone wanted me to put Jonathan, you want me to put the link in the chat. Good, look at me. I'm talking about the chat and we're not even reading it. So let's go ahead and grab that dude and see if we can get that one pulled up. While I drop the link in the chat for everyone to enjoy, again, do find your profit and loss statement because we're going to refer to it because you got to know where things are and how you're actually going to find it. So the link has been dropped in the chat. If you need more of that, do let me know. We're going to go ahead and dig in. Here's the deal. Price, volume, and mix. These are the three drivers of revenue that make a huge difference to your gross profit. Okay? Gross profit is, for those of you who don't know, and this is why I wanted you to go ahead and grab your most recent P&L statement, it's your revenue minus the cost to actually deliver your product or service. For most of your service businesses, you're going to see there's basically no difference. It's like, hey, I'm the one delivering the service. I do the thing to go out and make the money. If I make $100, I get to put $100 in my pocket first before I have to pay for my rent and my utilities and my Zoom fee and my web hosting and those type of stuff. The type of revenue that we get here, whether it's price, volume, or mix, is going to make a gigantic difference on your gross profit. And we are going to dive into that. All right. Price. What we're talking about when we're measuring price is not whether you charge $20 for something or $18 for something or $100 for something. What we want to look at is what changed last year versus this year. Price increases. Some might throw up the word inflation right now because we seem to be having a lot of that. We want to measure the change in the revenue you get because you changed your prices. Whenever we change our prices, we say that's a good thing. We're going to talk about more about why it's a good thing. There are some scenarios where you may want to drop your price. Price is not about necessarily getting revenue. Price is an operational strategy tool. Sometimes we drop price because we're going to be able to get more people to take advantage of our services, and we're going to ultimately be able to do better. We got a whole different section where we can talk about pricing strategy and some creative ways to apply it. But for the purposes today, we're just looking at what's the impact. If I raised my price, what did it do to my margins and my revenue? And so whether I raise or lower it, we need to be able to track that. Let me give you a quick example. Last year, we're out selling t-shirts, for example, sold 90 t-shirts for $10 each. 2022, we went ahead and sold 200 t-shirts for $12 each. In this scenario, we look at that $2 difference and we multiply it by 200 shirts. We made $400 extra because we went ahead and raised price by $2. So we need to know what that is. And we'll talk about why in a moment. Same type of example, kind of track with the idea. Here we go. If we track 5 t-shirts or sell 5 t-shirts for $20 in one year, and then the following year we do 50 shirts at $30, again, you look at the most current year's volume, how many you sold, and then you look at the difference. So we made $500 extra because we raised our prices. Okay, volume, this is just selling more or less because we love to think these things always go up. They don't always go up. Sometimes we get a hit. So that's the change in revenue you receive because you sold more or less, and we're going to assume that prices are the same. We need to separate them. We've got 3 levers. What happens is that we oftentimes look at our revenue and we just say, hey, my revenue went up. I want to figure out what went on. Let me give you a quick example here in Excel. Okay, hopefully people can see what's going on the screen here. If last year's revenue was $1,000 and this year I'm at $3,000, that's the beginning of the story. but not the end of the story. I need to find out what's going on and why, because it's gonna help influence what type of decisions do we want to make. And particularly because you're in services, and we're framing this right now around widgets and t-shirts, because sometimes it's easier to understand because there's a lot of different ways that services can go to market. But we're going to talk about how that applies to services in just a moment. So I'm trying to break down what happened when I went from 1,000 units or $1,000, sorry, to $3,000 here. What happened with that? That we ended up moving. What were the big drivers of that? Okay. An example here on volume. Again, if we sold 95 shirts last year, we got an average price there of $10.53. And then we sold in 2022, we sold 250 shirts. That volume number tells us, here's how much money we got out of volume. And then finally, mix. And I'm going to talk about mix in more detail, because this is the change in revenue because your customers bought different proportions of your products or services. In the scenario I'm talking about, we got two different types of shirts. We got a cotton shirt and we have a tech shirt. But if you're in a service business, like I'm a coach, so I've got one-on-one coaching, I've got group coaching, I've got speaking, I've got presentations, I've got keynotes, I've got a variety of different options. And the reason I asked in the intro, are you tracking by different types of revenue source? And it's not necessarily by every product. And I realize that if you're running Clover or something else, you can run these reports, but I'm asking, are you looking at it on a regular basis? Because the time we put in to do this presentation, I didn't wake up today and suddenly say, hey, presentations show up in my mind. I tried Chat GPT, it couldn't yet do PowerPoint, so I had to actually do this by hand, believe it or not. That took some time. If I'm being paid to do this presentation, the organization paying me just says, look, I'm going to pay you $1,000 to do your thing. I don't really care how long it takes you to make the presentation, how much research you have to do. That's on you. I'm paying you to deliver the item. Versus one-on-one coaching may be a little more the actual time I'm in front of the client, plus maybe some follow-up time, plus maybe some research time, plus some homework evaluation time, and providing feedback. Those pieces we want to track. But we have to know the proportions, because not all revenue is the same. If I am out there every time I do a speech, for instance, if I'm having to create it from scratch and do a whole presentation together with it, that starts to become not as good a revenue when you look at it on an hourly basis. If I've created it once and now I'm taking out and rolling down to 10 organizations, I don't have to redo it every time, suddenly that becomes a better option. But without understanding what's going on, I don't know what's happened to my revenue. I started at 1,000, I went to 3,000. Is that good? Is that bad? We're going to find out. Here's the key on your mix that you need to think about. And this is so important. These are all your different product lines, understanding how they interact with each other. There's really 3 key drivers you can have. You can have a new product or service. Didn't have it last year. I just brought it on this year. That's something new that we need to kind of keep a hand on. There's things that you're stopping or discontinuing. That's dropping out. We're not interested in those anymore, but we do need to watch them, because they used to get us, they got us $10,000 last year, but we decided, holy cow, I am burning myself out, or I'm having to sell so much, or I feel like I'm putting out in a lot of places where I don't have the resources and I want to allocate them somewhere else. Those are legit. And then the last one is, what's the change in the ratio between those products and services? And again, we'll get into some service ideas, because I want to talk about group coaching and some of the presentations I just talked about. There's items that we spend a lot of time and energy on that are not tracked by your accountant, and why we need to spend some time today. So a little bit on the mix example for those people who really like to understand how the number is calculated. We're looking at the difference in average price. This year's average minus last year's average times the number of units that we got out there. And we ultimately get a number. That's not 22 units. That's the 2022's units, to be clear. Gives us a number. So because we shifted to a product that was more expensive, we were selling more. 50 of those tech shirts are being sold at the bigger price. And because we shifted there, we got a little more revenue, because I'm selling more t-shirts. And most people think, hey, if I'm selling bigger price tag items, I am far better off. And my answer to that is maybe, but we don't know yet. So we're going to have to look. So let's look at our money walk, or our bridge. Sometimes people say that. This is where, this is the type of thing usually you don't get from your accountant or your bookkeeper. If they provided this for you, this would be amazing, but it's not on your typical P&L. So we started at $1,000 last year. That was cool. I raised my prices. If you remember, we had two different items we raised prices on. We got 400 extra bucks from one, 500 from the other. There's 900. Volume was the biggest increase. Ultimately, I sold 95 shirts last year and 250 the following year. So I got more shirts selling. And I started selling more expensive shirts. So that's where I got the mix and I got a bigger number. Problem solved, right? Here is the issue, the big warning. The impact that it has, price, volume, and mix, your impact on revenue and gross profit margin are not the same. They're not treated the same way. And that's why all revenue is not the same. Here's some basics. If you didn't have the opportunity to pull up a P&L in front of you right away, this is what I want to talk to you. I also want to give you, while we're at it, I'll just give you a little education. When people talk about top line, bottom line, whatever, I went ahead and put the lines that should show up in your P&L. Revenue is at the top line. So when someone uses the word top line or revenue or sales or gross sales, they're all talking about the same thing. It's that top line. Is the total of all your sales that you get in. Okay, from that, we're going to subtract our cost of goods sold or our cost of our services. That's what it costs me to buy the, if I'm selling the shirts, that's what it costs me to buy the shirt. That's what it costs me for the ink. It's what it costs me to hire the person to put in there. That gets your gross profit percent. To me, if there are only three numbers that you look on the entirety of your profit and loss statement, I want you to look at revenue. I want you to look at gross profit, sometimes called gross margin. It's the same thing, different word. People couldn't agree. We have to be different about everything. And then net profit. That's the bottom line number. By the way, if you ever hear, when you get to my bottom line or when it drops to the bottom line, that's why it's called the bottom line. Net profit is after you take care of all your expenses, how much do you have left? Those three lines, if you know those and keep track of those and understand where you're at from a percentage, by the way, GP percent, that's gross profit or gross margin percent, that really helps drive where we're going. Here's the deal. Price, when you raise or lower your prices, that price drops 100% to the bottom line. If I used to charge, let's see, I was charging $10 for those t-shirts. Now I sell $12. The cost for me on making those t-shirts has not changed. The cost for me delivering my service, ideally, has not changed. I get to take that entire $2 and I get to put that in my pocket. I put 97% there with free fees because nowadays we're all tend to be accepting electronic transactions where it used to be 100%. That is no longer true. It's usually about 97 because the credit card company, banks, etc., all like to take 3% from you. But that is the most effective way. If you want to put more money in your pocket, price is the way to do it. Challenge, not every customer is willing to pay more. The market may not be ready to pay more. Honestly, the service or the product may not be worth paying more. So we got to look at some other options. Those are all realistic categories that we can work on, but figure out. Volume always has the same profit margin. If you remember, we'll go back one when we talked about profit margin, gross margin. That margin percent is always the same when we look at volume. So last year, every time I did my thing and I made it, I bought it for $1 and I went and resold it for $2, I was always making 50%. So when we track our volume, we look at, I went from 1,000 to 3,000. Awesome. I was up 200%. Volume will say, hey, great. My profit should go up 200%. And then we get to mix. And with mix, it all depends. And the reason we're focused here is that mix, the question is, did you sell more high margin items or low margin items? And this, in my opinion, is where most people run off the rails when it comes to talking about their money. If you're selling a product and that item that you sell, maybe it's the thing that everyone wants, maybe it's your loss leader. You've probably heard of loss leaders. You go into the store and buy milk and eggs, which used to be loss leaders. They start seem stinking expensive now. I'm not sure if the grocery stores are making money on them or not anymore. However, they don't make a lot of money, so they're not interested in pushing a lot of eggs and milk. They bring you in there so you have to walk through the entirety of the store if you still go into the store and not do delivery. You got to walk through the whole store in order to get it. You have to look at your own items of what you do. We have a lot of service businesses. So I'll jump to the chase on that one. You need to look at how much time you're putting to deliver these. Sometimes we have costs. Sometimes we've actually hired someone to put the presentation together, to do some of the work for us. But by and large, I think most of the service providers I'm talking to right now, your biggest commodity is time. And if you have a copy of that P&L in front of you, I want you to let me know, throw it in the chat when you run across the timeline. Where does it say time and how much does it cost? So for you as a service provider, you need to figure out not only how much time you put in, but what is your time worth to you? What's the minimum you want to get paid, and what's the ideal you want to get paid? And then when you track that, you figure out, hey, when I'm doing this presentation, did I put in 5 hours? Did I put in 10 hours? If I want to be paid, I'm just going to throw out some round numbers, $50 an hour, and I put in $10 or 10 hours, sorry, it's $500. If I'm getting paid $1,000 for the presentation, I've already put in $500 worth of my own time in there. And that's how we can start to figure it out. And that's where you get the power of, hey, if I build this presentation, I can now deliver it to 10 people. In the future, the next time I do this presentation, the prep time is probably 30 minutes because I pull it up and review it. I don't draft it from scratch. And now all of a sudden, I only put in $25 and I got paid $1,000. Woo, that's good action. I like that. Right? Here's what happens to our money walk or our bridge when we start looking at gross profit. Once again, I want you to notice the price. It's the same for revenue and for your profit that you actually have, your gross profit. This is before, by the way, gross profit. We're only talking about the cost of the product or service, not your rent, not your internet cost, not your website hosting cost. All the money that's left, this $750 that's left, that's got to pay for all the rest of that. But we're noticing that price hit all that in here. All that came through both ways. Volume, our pricing, we went from $1,000 to $3,000. Volume just goes up right there. I'll get your question in a second, Amy. Mix, here was our challenge on mix. We ended up losing $105. And someone's like, hey, what's going on? I'm gonna take you to the sheet here. This is why understanding your margin percent by understanding it by product is important. I'm gonna shrink this down just a little bit. Hopefully you can see the Excel here. I do not enjoy doing eye charts, so I'm gonna top right down to the bottom punchline here. You can see here, we got cotton t-shirts and tech t-shirts. Challenges in our particular business, when we do the tech t-shirts, we don't have the ability to print on them directly. I got to outsource it. It turned out to be more expensive. I make 30% margin. Got to highlight it here. We'll pop it up in yellow. Hopefully yellow. Come on, yellow. There we go. 30% margin every time I sell a cotton t-shirt. I got 15% margin every time I sell a tech t-shirt. The problem is, if you consider it a problem, I had a higher proportion of people who wanted my tech t-shirts this year. So I sold more items, but every time I did, I got less profit margin from each one. So my profit margin went down, so that's why I lost. So Amy asks, profit margin on volume would change only prepare something once and offer multiple times. So on volume, there's another piece that goes into margin we're not going to talk about, and that's productivity. Productivity is what we do to drive down our cost. So the example I gave, there's one other line. If we're right now we're just focused on revenue. If we're looking at cost, we would absolutely add productivity to this, and that's how can I get more efficient with what I have. If you have people, it's how can I serve more customers with the same cashier. If I'm doing it myself, you're right, Amy. My profit margin goes up because now I've prepared it. And instead of building greenfield every time and saying, hey, I've got another great idea for a presentation. Sometimes it's how we sell, right? We go and we talk to someone and like, I would really love it, Brent, if you could put together a presentation talking about, the impact of employee dynamics on our, but great, I can do that. Let me go do a presentation on that, right? It takes me 27 hours to put it together and they pay me $200 for a half hour of time. Terrible investment, right? However, if that same presentation ends up being repeated over and over and over, and I don't have to redo it each time, now I'm becoming more productive. Volume is strictly a function of, how much extra money did I make? How many more widgets and units do I plan to put out there? You've heard service providers do this. Hey, I used to have 10 clients. Now I have 20 clients. My volume should double from where it was before. But are those all the same clients? Did I bring out a bunch of people who were one and done? They say, Brent, I just want the half-hour conversation. Free my mind of some interesting, fun topic so I can go about and keep conquering my business. Cool. Happy to do that. But if that's all I bring on versus annual clients, that balance isn't the same. Clearly, an annual client, I get paid for much more. I charge much more. And it's going to take much more of my time, by the way. But not all clients are the same. Not all units are the same. Not all offerings are the same that you have. You might do a package that's 3-hour seminar and you're done. That's the last of the engagement. Or you might have an ongoing. But we have to know which one they are. And ultimately, how much money does it make us? Because it is not, I discovered this the hard way. When you start out, you don't have much of a portfolio. If you're going to do workshops, you have to design the workshop. Now, you can go sell vaporware. Don't tell the people that like, hey, I've got this good idea. I haven't quite put it together. I'd like you to pay me to put the presentation together so then I can go offer it to everyone else and not have to have them pay me for it. Okay. What you do though is you go out and you're going to build your initial stock, and then you have a choice. Do I go out and I sell new things that I have to build and create? Or do I sell the items I already have in the hopper? Maybe they're tweaked, maybe they're updated, but they don't take as much time. It's a choice and a balance. There's not necessarily right or wrong. Would it be great to keep rolling out the same material over and over and over? Sure, until your audience has heard that topic a lot. And now where are you at? You're selling stale content. So there's a balance, but I think that's important. Is everyone tracking with me? Getting some maybes, getting some people checking their voicemail. That's fine. Okay. Again, I want to highlight service businesses. Did you count the value of your time? It does not show up on your P&L. It does not show up in any of your financial statements. But time is your most precious commodity. And as a self-employed individual, this is how people end up getting paid $4.32 an hour. And it's because we don't value our time. We don't calculate it into what we need to do. So essentially, when you're doing some of this analysis, I want you to treat yourself like an employee in terms of calculating. Know your minimum. So your minimum cost should be, I refuse to do this work without getting paid at least this. Is it $15 an hour? Is it 25? Is it 50? Is it 100? I don't know what your number is. And it depends on your stage in business, your stage in life, your needs outside personally. All that comes in. If you're just starting out in business, it may literally be, I have to take any client I can find. This may be your perspective. I'm not convinced this is totally accurate, but I have to take any client I find at a rate that's somewhat reasonable because I need to build up where I'm at. A lot of people do that. I'm not going to comment on the right or wrongness of it now. There are times when like that's what you got on the table and you got to eat this week, so you take the job. Okay. There are other times where you say, look, I'm going to say it's not worth my time or energy to do it. Little twist on it. Remember we talked about we could sell the 3-hour workshop, we can sell the 1-hour contract. Or sorry, the 1-year contract. 3-hour workshop is nice because we had 10 people on the call. So we could get 10 people in. Those 10 people, awesome. They're all paying the same bill to get in. They're all paying $1,000 and make it $10,000 to do this. Sweet. How much marketing work does it take to get those 10 people in? How much relationship building? How much selling do you have to do that? Versus each time if I land an annual contract, it's less time on the sales and marketing, prospecting, potentially on the design side. So those are pieces that I love everyone to check in. So real quickly, here's the key. Price is your most powerful. If you raise price by $1, you get to put that dollar in your pocket every time someone buys. If you decide to discount, the converse is true. Oh, I really want this deal, so I'm going to discount it. Well, guess what? Every dollar you give away is gone. You don't necessarily get it back. You have to track your details. If your P&L is just in an aggregate category, or you don't, and I don't need the whole profit and loss statement. I'm really just talking the revenue and the cost to deliver that. And for a lot of folks, even if you can get detail on the revenue, particularly if you're in service, you can start to figure out how much time am I actually putting in that to get your cost in there. But you have to know your workshops versus your one-on-ones, et cetera. How do those engagements happen? Okay. Again, you got to have your profit and loss categories at least to gross margin or gross profit. Okay. You got to know what expenses you're actually putting in there. And this analysis can absolutely guide your actions. With this information, I work with businesses all the time. Once we understand this, then we decide what are the actions we need to take next. Which customers should we go prospect? Therefore, where should we be networking? Where should we be spending our time? What should we be designing more things and doing more things? Sometimes that's an excuse to keep us from selling or marketing. Sometimes it's, I've got what I need. I know where I'm most effective. I'm going to get out there and do it. So with that, I want to just offer an opportunity for anyone to come off of mute if you're interested. and ask some questions. You can drop some more questions in the chat. Invite anyone if you want to talk a little bit more about this topic, anything else about your business, schedule some time with me, connect with me on LinkedIn. And if you have not checked out the Idea Collective Small Business Incubator, please do that as well. You will find it is well worth your time. Open for questions, thoughts, comments. Amy.
Brent, this is Amy. I guess I just want to recap what I think I heard you say, which is to use or capture your time in your COGS, like assign yourself a number per hour and put it, as a cost of that line item. Is that accurate? Is that what you're getting to?
That's what I would do. It doesn't go on your tax return. This is for the purposes of doing this analysis. It is really,
Sure.
Small business owners are notorious for time just sort of running out. And we feel like, man, I just spent all day and this is all I achieved, right? All those feelings. Once we start to assign time to where it belongs, then all of a sudden I figure out that, like, I feel really good. Dang, every time I do that presentation, they pay me $2,500. And then I'm like, well, yeah, but wait a second. I got to call on like 50 businesses. And that takes me like 100 hours worth of follow-ups and checks and all this other stuff. And all of a sudden I'm like, ooh, that's only $25 an hour. Is that what I want to be? I don't know. That's you and your business. You've got to determine that. But that's where people end up. The revenue just seems to get stuck and like, I can only get to 50,000 in revenue. Why? Because we're chasing what seems like a big line item. Ooh, $2,500. That's a nice number. Not going to say no to that. But then we end up being in a position where we are burning more time than it really warrants. Cheryl.
Yeah, hi. Excuse me. Hi, Brent. Sorry, I'm finding this really fascinating. I have a question in terms of product as opposed to service. So one of the businesses I have is in clothing design. And when I create something new, there is quite a bit of time actually that goes into the design of the garment. You do a prototype, you fit it, you do all the fidgeting around before you get a final pattern that you're going to use for manufacturing.
Yep.
So, and that time could vary depending on the garment. So how do I cost that in? What I've been doing is like, I just call that the cost of doing business. And then I do the pricing and the P&L stuff based on the final pattern piece moving forward for manufacturing, because that's easy to calculate.
Yep.
But how do I work that initial thing in? Because it's not a constant.
Correct. So number one, I'd put it in research and development. I mean, it's a cost. It is a cost of doing business, but you can actually specify it, because now once we put it in that category, now you can track it. So if I were to go back to, let me go back to the example I had of the Excel sheet I have up here really quickly. So what I'm going to show here, this is, shrink it down just a touch. This is our cost per shirt. Okay, I've got $7. Well, we can't really see. It depends on what we're selling it for. We were selling them for 10, so I'm making $3 on a cotton shirt. And interestingly, here I was making $3 on the tech shirt because it was priced too low. Ultimately, so if you're making, let's do a simple number, $10 per item. I don't know. Do you have an idea how much you make each time you sell a shirt? Just talking about strictly the cost of the shirt plus printing. What do you ballpark? Do you know, Cheryl?
Sorry. The cost would be about with the pattern or just the actual materials?
With the pattern.
Probably about 20, I think it worked out to, or 22, somewhere in that.
All right, let's go with 20. So here's one of the cheat codes of finance. When you round everything off, it's easier to do the math in your head. Otherwise we quickly get lost. So let's say it costs $20, and let's say you're selling that for 50. Okay, we're just making up numbers here. So you make $30 with each shirt. So what you have to figure out is you start to get a sense of like, how much R&D time does it take me in order to get that shirt to work right? You're probably testing out different fabric materials. Does the color come through? I printed it on the white shirt and that sort of looked dopey. And the second I washed it, the shirt wasn't quite white. Like all the things that you're doing during R&D, I didn't like that fabric type. I didn't like how it overlaid, etc. That's whatever that cost is. So if it costs you $3,000 to design that shirt and you're making $30 each time, your first 100 shirts you sell are just recouping your cost. So
Okay.
that's how I look at that. You don't actually, generally you don't want to, it's called liquidating. You don't want to fully liquidate all that cost in there. I like
Right.
keeping the R&D separate, but it's another benchmark that you can keep track of, because it's sort of like, what is my path to break even?
Yes.
My path to break even on that shirt is if that's why I'm rounding the numbers up. If I went with $3,000 to develop the shirt, that's, by the way, I'm including my time, because that's probably where you're spending a lot of time. The actual printing of it, once it gets going, is probably cranking along reasonably fast.
Yeah, it looks after itself.
Right? But that initial thing, if it costs me $3,000, I know I've got to get 100 shirts. So now I'm starting to think about, is that worth it? Because I got the 100 shirts just gets me to break even, gets me to zero. And does this have a run of like 200? Does it have a run of 150? Does it have a run of 10,000? If it's got a run of 10,000, right, that's a no-brainer. Now it becomes part of your inventory. And it's one of the decisions that businesses are often challenged with, because we make a lot of upfront choices. When I built this presentation, I'm doing this as a service to the community in a promotional effort. So what's my return? Ultimately, that's going to be hard to cost. When I get a lead out of this and converts to a client, I've got to figure that out with my time. And we all do lots of that, social media, all those things. Like, however, I believe that even in those marketing activities, there is a return that you can measure. So for you, I think that's a way to do it. And it varies with each project, but you'll start to get a gut feel of, it's a 100-hour project. That's a 20-hour project. That's a 50-hour project. That's
awesome. That really helps. Thank you.
Well, you're welcome.
Awesome.
And circle back to Amy. Amy, did I answer your question sufficiently? Good. Thumbs up. Awesome. Cool. Does anyone else have questions related to how they would understand their business, or even how they might want to break up their revenue lines? We can talk about how to isolate that, because it's the key principle here is we want to measure what matters. If you have a copy of your P&L in front of you that your bookkeeper does, or that you're doing yourself on QuickBooks or another tool, it's got like 57 lines of stuff, and you're like, what on earth am I supposed to do with all this garbage? And that's why I say focus on the three. I want you to focus on your revenue. I want you to focus on your gross profit. For us service providers, we're gonna have to spend a little bit of extra time and energy, because time doesn't show up there, but I assure you it's worth it. I assure you it's worth it, because man, we just discovered I'm no longer going to pursue that activity because I don't get enough from it by the time I'm done. For Cheryl, it may be a type of shirt. Maybe a type of shirt that just always takes too picky and finicky to actually get it done. So we're like, we're going to avoid that. We're just not going to. Someone's like, can you do this type of material and whatever? Like, nope, not happening. We don't do sequence here, right? Like, I'm out, go talk to someone else. I'm not doing the sequence. So, and then it's the final profit, because like the example I just gave with Cheryl, if once you know your gross profit percent, and in that case it was, or dollars, it was $30. Now I've got a bucket of money on the bottom, my R&D, my rent, my utilities. Then you figure out if that total, let's say that total was $6,000, I've got to go sell 200 shirts, making $30 a piece. Don't drop your price, by the way, because that keeps eating your money, right? To be able to get back to zero and break even. That's what we're doing with the measurements. So if you're not tracking, we just have no visibility. And the only default that we have as entrepreneurs is we go out and let me just do more. Let me just do more. I'm not selling them at $50. I'm gonna sell them for $40 now, because I can sell more. Cool, yeah, but now you only make $20 each time and not 30. And guess what? Instead of selling 100 shirts, you don't have to sell 150. Sorry. Oh, you cut it, you drop it by even more. I'm gonna sell them for $30 so I can really get them good. Now you have to sell 300 shirts to break even. I mean, it starts becoming very punitive. But when we're not measuring, it's just like, it's cash out, it's cash in. I'm putting money in my pocket, and then pretty soon you're just like, what happened? I don't have enough money to pay rent. I can't actually buy new t-shirts anymore because I don't have enough money from what I just sold to be able to pay the bill. We end up kind of getting stuck. So with that, if anyone has ideas about how we want to dig into your profit, or how your revenue lines, like what type of service lines and things they should look at, how to really get visibility, good visibility into that revenue, happy to have that discussion. we absolutely don't have to have that discussion, and that's super cool. If I can help you along the way as you're thinking about this, doing these type of reviews, this is just sort of the basic beginnings. When I do financial reviews with people, we start with this to understand where we're going. This is one of the pieces we start with. But then we really want to look at what are the next 3 actions that you need to take in your business. Maybe, like, I'm going to use Cheryl's example because she fleshed it out a little bit. Maybe we want to figure out how do we tighten up what goes on in R&D. I don't know how long it takes, or we haven't been there, but that could be a spot that we might want to look at and be like, wow, I don't want to have to sell 100 shares to break even. I'd like it to be 50 or 25. We set a goal, and then we'll actually design the metric, because once you can put an operating number around it and say, Cheryl, I don't want you to spend more than, if it's 25 hours, that's basically 3 full working days. I don't want you to spend more than 3 full working days doing the whole prototyping design process. She's like, got it. That's a target I can go to, because now we're back in her zone of genius. She knows what it takes to do those materials. That suddenly is an actionable item that you can move on. That's the type of translation we want to do. Now we're out of the world of thinking about what happens with your financials, which, by the way, if you've just received your February financials, you can't do anything about February. I'm sorry, it's already gone. And we're already most of the way through March. So I want us to be thinking about what are the things we look forward to do, those indicators that are going to help us.
I have a question.
Lisa, tell me.
Sorry, I had to pop off and get a phone call. So did you talk about like tracking tools that you could use for us service provider peoples?
That's a great question. So some people use like project management software. If you're tracking your clients by project, I know you can do that. I use just something like, I just use Toggle. It's just a time tracking tool. And when I start working with a client, I use
Toggle in the past. I know QuickBooks has a beta out there of time management for QuickBooks for entrepreneurs, self-employed kind of a thing. So I just didn't know if you had one that you like more than another.
So the one I love is the one you'll use. It's like when I tell people you can track your mileage when you travel around, and everyone's like, oh, I don't ever track my mileage. And I'm like, well, keep a little book there. I never write in it. Well, there's an app. I never use the app, right? It's ultimately, it has to be whatever works for you, because it's not as simple as I pick up the receipt or it's on my credit card bill so I can always track back to it. It's elusive. And so it sounds like a cop out. Like, I use Toggle. It works well for me because there's an app on my phone. It's on my computer. When I'm working with a client, I'm clicking the button and I'm getting it done. And I get in the habit of, like, the clock is always running. Even if I'm done with a client, I start it again. Even if I don't know what I'm going to do yet, it's just running. And then eventually I'm like, okay, I just did emails and admin for the last hour. There goes in the category. I'm going to switch task, hit stop, hit start again. I'm always running it. That's how I use it to be able to capture all my stuff.
See, I never used it that way, which is why it never really made sense with, like, anyway. So yeah, because right now, as you know, I do what's that called again? Words are hard. Retainer based. And so I want to make sure that I'm getting the money worth on the retainer based aspect of things. And so for me, I was just like, I didn't like tracking it and then doing the hourly rate kind of a thing, that, not spending time for money, right? Trading time for money. But at the same time, I think I'm spending too much time on a client and I'm not getting enough retainer from him. So it's like, I was just trying to wonder what you were using. So
and that's a perfect example, by the way, when you're on a fixed fee basis. Like, it's, you pay me $2,000 for the month. I do these things, right? I produce this outcome for you of some type. And then how do we make sure we're not pouring extra time into it? Or how do we validate that we're kind of doing the things we need to and balancing it properly? For me, when I didn't always hit literally the stop and start each time, I'd end up at the end of the day and I'm stuck with, like, oh, there were 6 hours. Obviously I was working, but I went from email to then doing this report to then doing some homework to then I caught the one time I was actually in front of the client, because that one sort of like somehow triggered in my mind, like, hey, start the timer on your meeting. But I missed the others. When I always hit stop and start, the clock was always running. And sometimes I have to go, oh, so you're right, I finished that thing at 5 o'clock, so I'm going to roll it back to 5 when I hit the stop. But it would always at least be running, and I wouldn't miss out on the opportunities that were going on. So for me, that was it's what worked. Other people have different levels of discipline, but 100% on your retainer clients. I think, Lisa, you were right on. You have to get some visibility there to help you figure out how to have a discussion next year of, like, hey, when we first talked about this, because you can start to dig in. You're like, I thought it was going to be 5 hours. Turns out it was 10. And oh yeah, that intern you said you were going to hire that you didn't hire, that I end up having to do that work, right? Like all the things start to come up, and we start to understand how to engage. It informs now our decision on how to engage with that client. Say, yeah, I got a proposal for what we need to do next year, right?
Okay. Thank you.
Hopefully that helps.
Of course it does.
On the time management piece, I wanted to jump in here. I do auditing for people, and I always walk in with a framework, a list of questions, an outline of all the things I want to get through. And I know from rehearsal how long it's going to take me to get through there. And that is my metric that I use to actually track my time on top of, a basic watch. But I know that this outline will take 3 hours, and then, lunch, and then another 3 hours. And then I know that everyone's hopefully gotten their time's worth.
That's really good. If you can schedule it out, particularly if we're thinking about, for me, I'm thinking about workshops and seminars. It's a certain amount of time they want me in front of people. They hire me for a 2-hour deal and I blow through it in a half hour, no one's happy. And for sure, if I'm standing between them and taking a break for lunch, no one's happy. So really figuring that out, I think it is essential. And it becomes then a good tool. How do I measure myself? Like if I figured out how to pace myself through these points, those are all important ways, I think, to track that.
And I always flag 1 or 2 of those items as optional, in that they can either be dropped or they can be replaced with something else that was found in discovery.
So true. Have a bailout point if Q&A goes deep, because workshops are a classic example. We don't want to really cut someone off. If you're making really good progress with someone, you want to cut them off. So have that flexibility. But either way, there you've got a framework that you can literally start plugging in. That's 15 minutes, that's 20, that's 25. And the first time you do it, who knows? First time you work on the pattern for the shirt, who knows how long it's going to take? Pretty soon, you got to feel, and that, hey, and that's what you do when you're bidding. Like, Lisa's doing these retainer-based agreements. Because she's done it before, she has the ability to get pretty close with like, hey, this is probably a $5,000 deal. Because in my mind, I know what it is. I'm not going to specify out, hey, you get 10 hours of this and 5 hours of that, because we're not selling by the hour, we're selling by the project and the result. Well, cool. Well, everyone, thank you for joining. If I can help you in any other way, do please feel free to reach out to me. I'm going to throw the different contact information up there. I would be honored to be able to have a conversation with any of you. So feel free to reach out, schedule that coaching meeting if you're interested. Connect with me on LinkedIn if we're not, and do find us out here on the Idea Collective Small Business Incubator. Again, I'm Brent Halfwassen, Milwaukee Small Business Coach. I appreciate your time, and we'll talk to you later.